Tam Talk Radio Network.
From the Sunshine State, this is Tampa Bay's Tan Talk.
It's time for FLA Law, brought to you by the personal injury attorneys of Paranick, Caulfield, Averill, and Noyes. This hour will be informative, along with taking your questions and comments. Now, here are your hosts for today's show.
That's right. This is Jacqueline Bryant, and I'm here with FLA Law live on the radio. Thank you for tuning in. As always, as you heard, this is FLA Law live on the air, your live legal call-in talk show, and hopefully you are one of our faithful listeners, so you know that we come to you every Tuesday at 5 o'clock to discuss various legal topics, mostly personal injury, but oftentimes, like tonight, we have special guests from various other areas of law who come in to talk to you about different topics that we think are really important for our community here locally and across the state of Florida. And so I think that does apply for tonight. We have an amazing guest who I will introduce you to shortly. But before I do that, I want everyone to be reminded of how you can stay tuned in and engage with us tonight during the show. As you know, we are the personal injury attorneys of Paranick, Caulfield, Averill, and Noyes. And usually we do talk a lot about personal injury. But often we'll talk about various other topics. And so we want you to stay tuned so that you can listen and hear. You might learn new information tonight, or there might be something here that maybe you don't know, but something you can share with family members or friends. So take a moment, let folks know that we are live on the air and also streaming live on various platforms. First and foremost, let's talk about our two live streams right now. We are streaming live on YouTube and also on our Facebook page. So if you search Paranick, Caulfield, Averill, and Noyes Injury Lawyers on either of those platforms, you should find us live. You should see like a red circle around our logo, which lets you know that the program is live right now. You'll see myself and our guests. We are in the studio, and so that should let you know that you're watching the right thing. Of course, we also are live right now on the air and AM 1340 and FM 106.1. You can obviously listen there as well. And then if you just have to stop for a moment, you're not able to finish the show, but you want to watch it and listen to it later, you're in luck. We also have our podcast where you can listen to tonight's show and also other broadcasts from the past Tuesday night shows. So that will be on Spotify, iHeartRadio, and Apple Podcasts. You can search FLA Law on the radio. If you search that in either of those podcast platforms, you'll find the show. Just look up tonight's date and you'll be able to find that later on when it is uploaded. With that being said, we also like to hear from you. Sometimes people like to comment and have questions about what we're talking about. So if that's you, if you, like I said, you, family members, friends, someone is enjoying the topic and they want to chime in or have questions, feel free to give us a call at 727-441-3000. Again, the live call-in number is 727-441-3000. That is going to be the best way to get your questions answered live over the air. However, I am monitoring our live stream on Facebook. So if you are one of the shy people who don't want to hear their voice on the radio, that's fine. Just go on our live stream and drop a comment in the comment section, and I will read those out live over the air. That way, if you have something that you want to add to the discussion, it will definitely be read out by me, and my guests will talk about it. And if there's a question, we'll try to answer it. So with that being said, without further ado, I would love to introduce to you our special guest for tonight. And she is a local attorney, which we love to have local lawyers here because we want people who are in our own backyard who can help those that live in the Tampa Bay community in Hillsborough, Pinellas, and Pasco County. So with that being said, I have Alina Miles, who is here, and she is a tax attorney. And that is always just admirable to me in itself because tax is such a very difficult and complicated topic at times. And before I allow you to introduce yourself and give us all the things about you and your bio and your law firm, I just want to tell a funny story that why I don't know, but I took tax in law school. I took tax in law school, not necessarily realizing how much math would go into it. And I don't even know what I was thinking because I've never really been great at math. I've had a love-hate relationship with math my entire life. And I will say that tax ended up being my lowest law school grade. So for you, I tip my hat to you and say that you are pretty much regal in my eyes. Anybody that can do tax law, I definitely tip my hat to you. But with that being said, it's important, because there's a lot, because it is very complicated and nuanced and so many laws and statutes and codes and things that apply, it can be confusing for, your average everyday lay person. And so with that being said, I thought it was a great topic, specifically what we're about to get into, which I'll share in a moment. Given the times and the climate that we're in right now in our area. But with that being said, Alina, please introduce yourself. Let us know a little bit about you, what you do, and where you currently work.
Yes, thank you, Jacqueline. I'm excited to be here. Thank you for having
Absolutely.
me. Yes. My name is Alina Miles. I'm a tax attorney and I do have CPA credentials. So here you go.
Mm-hmm.
I have over 15 years of tax experience in capacity of a CPA. And then I went to law school. So I was in my CPA profession doing tax before I decided to go to law school. But obviously, tax class in law school was my favorite. And I was a certificate of merit.
Mm-hmm. Oh, my goodness. And again, I bow to you. I tip my hat.
And a little story there when I had a very tough professor in tax class, and me being a CPA, I thought, oh my goodness, this is going to be easy for me.
Sure.
But then somebody got a better score, did better on the exam. And I was like, I'm not having that.
How is that possible?
Yeah. So I was fighting very hard. And
did you tell your professor you had come from that background?
Yes, I did.
I would have hid that. And they just would have thought I was naturally smart. No?
At the beginning, I was a little bit, shy. But then I'm the ego, I guess.
Yeah,
the ego
side.
Yeah,
I gotcha.
So no, I made it through and I got what I got. But and I opened my tax law practice in Safety Harbor.
Okay.
I love Safety Harbor. It's a beautiful small town on the water here in Tampa Bay. Mm-hmm. And my my law firm is called Attorney Legal PA.
Yes.
And all I do is tax. Okay. So to give you an idea, I do IRS-related tax matters, which means people who are delinquent on their tax filings, they come to me. Mm-hmm. People who owe back taxes, they come to me for options. And so that's one bucket of tax things that I do. Another side of it is international.
Okay.
So, yeah, I do have tax background in international. So that would be inbound, for example, strictly, let's pick a Canadian person, strictly Canadian person who has nothing to do with the U.S. other than rental property in Safety Harbor.
Okay.
So that's inbound. And the other side of it is outbound, which is U.S. citizen person that has foreign bank accounts. So that's another side of international. And the third bucket of what I do is Florida sales tax. So when you do get audited for sales tax, I can help taxpayers through that tax audit.
Okay.
Yeah.
So you handle a lot of the big, scary things that people don't tend to want to handle on their own. I feel like when you think of audits and all these sorts of things, delinquencies, deadlines, it usually makes people skin crawl a little bit. You get that letter from the IRS in the mail, you always cringe before opening it.
Yeah, the only thing that people, some people, it's hard to understand it for some people is that audit doesn't mean you're in trouble.
Right.
So part of my role is to kind of comfort in a way that, okay, if you can substantiate your expenses, if you did the right things, if there is nothing
to
going
really worry
on
about.
there, shouldn't be nothing to worry about. So audit does not by default mean that you're in some kind of trouble.
Right.
Yeah.
Okay.
Mm-hmm.
Well, I'm sure we'll touch on it a little bit here and there as far as the different things that you do to help people in these various areas. But mainly what we're going to be talking about tonight, I think, is pretty timely, as I was talking to you about over the air, seeing as we have something brewing out in the Atlantic. I believe it's already been named as Aaron, not quite a hurricane yet, but projected to potentially become one. And we don't quite know yet where it's projected to go, but it could be anywhere on the east coast of our country. But it looks like it may be headed our way, right?
Right.
So you are very versed in different things that pertain to hurricane casualty losses and how the tax options can come into play for businesses and individuals, right?
Correct.
And so that's why I thought this would be a great show, because not only are we on the heels still, it feels like it hasn't been that long, but we're coming up on a year almost of Milton and Helene.
Yeah.
And those storms were quite devastating for our local community here, for many, many people. Some people who still haven't, quite recovered from that. And then now we have a new hurricane season, headed our way. So with that being said, I wanted to kind of jump into that because I know that you're going to maybe have storm-related issues or questions, and then you have tax deadlines and extensions and all these things that are going on, and people may not even realize they may be entitled to certain relief. So let's jump into that. When it's basically this hectic season and you've got storm-related questions coming at you from all angles, who do you think can get the best benefit out of the kinds of programs that are out there right now?
Yeah, so basically, there are individual taxpayers that could have been impacted by hurricanes. And if we pick on Helen and Milton, 2024 hurricanes, there was IRS relief. You're right, there was IRS relief in terms of filing due dates. But if there are listeners out there who were not aware of that, still have, questions, it's not too late. You can still consider some options there. And forward on, there are different rules forward on. However, there are options there as well. And the other side of it is businesses. So like if there are businesses in Florida, for example, and it doesn't only portray to Florida, but we're talking Florida local stuff. But they also might have sustained certain hurricane losses. And there are options there as well.
So do you feel like there's a certain, let's say top 2, top 3 questions that everybody's asking right now when they come to you and they're like, I've got to do my taxes, but I've got all these losses and different things. Are there anything particular that stands out?
Yeah, so one of the questions that comes up is, if I received insurance reimbursement proceeds, is that taxable?
Okay.
That's a very relevant
Great question.
Yeah, that's a very good question. So generally speaking, and I'm talking general, but in general terms, yes, if your insurance reimbursement proceeds exceed your basis, and basis is like a tax person word. So
yeah, I got to break it down, especially for me who did not do well in tax law class.
So basis, in simple terms, whatever you paid for let's say if it's a house, whatever you paid for the house, plus leasehold improvements that you made to the house. So it's not just limited to the monies that you paid for your house. It could be leasehold improvements, for example, in addition to the original cost of your house. So if your insurance reimbursement proceeds exceed that, which is that basis word that I'm using, generally it could be taxable. However, there are exceptions. So for example, if you reinvest those proceeds into your home,
right,
you potentially can exempt that from being taxable. So here you go. That's one of the biggest questions. Another question is, if we talk technicality, is that, do I have to claim, if we pick on Helen and Milton, do I have to claim those losses on my 2024 tax return or else? Okay? Yeah. So there are options there. Technically, you can do a calculation and amend your 2023 tax return if I'm talking about those specific storms.
I saw that in your materials. So how is that possible if it hadn't occurred in that tax year?
Yeah, that's a special rule, if you will, where you're able to optimize.
Okay.
So you can claim it on your 2024 return because the loss happened in my example in 2024, or you can elect to amend. So it gives the taxpayer that leeway, if you will, to figure out the numbers and optimize.
Okay. So without obviously getting too deep into it, I
Yeah.
don't know how complicated it would be, but let's say someone comes to you with that scenario where they've already filed 2023, but then they incurred all of these hurricane losses in 2024 and they want to now amend. How does that process work?
So basically, like, we will look at the calculation side by side, 2024 calculation, 2023 calculation. Obviously, it's case by case because tax return for 2023 is different, could be way different versus tax return for 2024. And basically, we'll look at the calculation and see where it makes sense. Does it make sense to even go that route?
Right.
We don't know without looking at the numbers.
Right. Okay. And so, what are some of the things? And it might be a little bit jumping ahead of what we were talking about right now, but as we talk, things pop up in my head.
Yeah.
So, what are the things? Especially now that we have this new potential storm out there, we hope that it doesn't come our way. But if it does, what are some things that people can really start to prepare for? Because you have to think about documentation and evidentiary support. If they're going to call you and say, Alina, I need your help amending this, and you're going to say, well, show me this, what kind of things are they going to need?
Yeah, first of all, that will, let's say we do amend the tax return. Let's pick on that example.
Sure.
And, let's say it's so many years from now, the taxpayer is going to get audited. Once again, being audited doesn't mean you're in trouble, but the auditor will ask for substantiation, the evidentiary support.
Yeah.
Correct. And so 3 years from now, or how many years from now, is the taxpayer going to remember, what those losses are? They're going to have a breakdown. Of course, hopefully, yes, if they come to me and I do the amended return. But ultimately, the burden of proof is with the taxpayer. Okay, so the taxpayer would have to come up with evidence, substantiation support to prove that those losses were indeed took place. So to answer your question, so there is no exact answer, like just, let's say, just taking photographs would do the job. No, it's facts and circumstances, right? So you have to look at the full big picture. Are there appraisals? Are there pictures? Right now we have video capabilities and so on and so forth. Receipts, how much did it cost to replace the property, and so on and so forth. So it's bucket, if you will, of documents that the taxpayer should keep to substantiate those deductions if they were to amend or if they were to claim those losses on their current 2024 tax return, in my example.
Okay, great. And so I know a lot of what we look at when it comes to hurricane losses can be kind of separated into individuals and then also businesses. And I'm sure we have some business owners who are listening, and we also know how many businesses were sadly impacted by the storms, and some were forced to close or are still not quite open. So I wanted you to try to explain to our listeners what are the differences between how the individuals may deduct hurricane losses versus how businesses can do it, and whether the rules may be more favorable to others.
Yeah, so basically for the businesses, there are less limitations.
Okay.
I can answer that in short like that. So what does that mean? So with the individual side of things, there are more limitations. And with the business side of things, there are less limitations. So basically that's the biggest difference. Now, if I were to jump back a little bit into what kind of limitations do we have and give you like a quick and dirty history on the law.
Yes.
So like back in 2017, we have TCJA, which is Tax Cuts and Jobs Act. Okay. And that was signed into law by Trump during his first presidency. And so there they put more limitation on casualty loss deduction, but for personal side of things.
Okay.
To your point, it was just for the personal side of things. So one of those limitations was a limitation to federally declared disasters. So for example, if somebody sustained casualty theft losses, for example, they had crypto stolen from them. Okay, so now TCJA on, which is 2018 on, you cannot claim your theft loss as your casualty loss on your tax return. Okay, it's only limited to federally declared disaster, which means disaster, signed into law by the president.
I see.
Basically, that's how it works. So that's a limitation. And okay, and now to give you even more history on the law, now we have Big and Beautiful.
Yes,
and Big and Beautiful,
which is very new.
Yes, and Big and Beautiful was signed into law July 4th, 2025.
Yeah.
And so there you have a new provision where potentially state declared disasters, but that could be looked into, and you potentially could deduct hurricane related, casualty loss. It's not limited to hurricanes.
I see.
Casualty related losses if it's state related declared disaster. Now that takes effect 2026.
I see.
So even though it was signed into law in July,
it's not effective yet.
It's not effective yet. So there is kind of a little bit of different law that will take effect there. But also there was a Biden law. Biden law was signed, I believe, in December of 2024. And there they relaxed the rules a little bit, if you will, but that was through beginning of 2025. So you really have to look at.
So that has now expired.
Right. So you really have to look at when the disaster took place and so on, and which law applies, because there are multiple legislative things out there for the casualty related stuff.
So then, to use your term, let's pick on this storm that's out there in the Atlantic. And let's just say hypothetically, worst case scenario, it does end up coming this way. And unfortunately, our community does result in some sort of losses in property and things like that. Because that Biden law has expired as of May of this year, and Big and Beautiful does not take effect until next year, it sounds like a storm that occurs in this season may be limited to the older law from 2018.
Yes,
is that right?
That's right. I just want to make a little correction that Biden's law, I think it was through like February, not May.
Okay, I apologize.
That's okay,
February.
No problem. Yeah.
Okay.
But no, ultimately, it appears that definitely the older law, which is that TCJA, would be the law, and because the Big and Beautiful provision in terms of, like, let's say, state declared disaster, and once again, this is theoretical, but
sure,
that is effective as far as I know, January 1st, 2026. So you would definitely have to look at the rules, and like I said before, personal versus business. The personal side of things is not as it's more limited.
Yes. Okay. And so when it comes to I think you said a TCJA, we're talking about what kinds of losses that you can claim.
Yeah, so basically you have to, like, I think one of the questions came up, can mold be, for example,
That's a good question.
Yeah.
I'm sure a lot of people experience that. Yeah.
Deductible hurricane-related expense. So there you would just have to prove that somehow that mold is directly related to the hurricane. And once again, casualty is not limited just to the hurricane. But typically that's what, in Florida, that's what we experience. So in the mold question, it's going to be hard to prove that mold is directly related to the hurricane. But technically, it's whatever that casualty loss is related to the casualty. That's generally how you think about it.
Right. And so, just not to sound facetious, but not everything is considered a deductible loss, right? So if you have, cute lawn furniture and signs and things that blow away that maybe were sentimental and wonderful to you, but does that necessarily mean that they can be claimed as deductible losses? under the law.
Exactly. So you got a bunch of thresholds, if you will, to go through to get your answer. So first one is that due to the federally declared disaster, then you have
That's
to figure
step one.
out
Yeah.
step one. Then step two, figure out which law you will apply, because there's multiple laws out there. And then you look at, is it directly related loss? Is that loss directly related to that casualty? So
Yeah.
that's another step. And then you run through the calculation. Is it really deductible? You gotta have to look at the numbers. You won't be able to make that determination without going through the calculation. And it's all case by case. It's not something that you universally can apply to everybody.
So really, when it comes down to what's deductible, there is kind of a numbers component to this, right?
Mathematical.
Okay.
Correct.
So we'll get to that in a second, I'm sure. But I think we're kind of reached our halfway mark. So now would be a good time just to take a short little break for our listeners. We will be back with Alina Miles, tax attorney locally here. And her office is in Safety Harbor. And she's talking to you all about tax law and hurricane losses. And so we'll be back shortly after this break.
This is the Tan Talk Radio Network.
After a car accident, there are many questions that you need answers to. Who pays for my car repairs? Who pays for the medical bills? What about my lost wages? And more. The personal injury law firm of Pernick, Caulfield, Averill, and Noyes has been answering these questions for their clients for nearly 70 years. Since 1955, they've been a voice of the injured in the legal system. As one of the longest established law firms in Tampa Bay, Pernick, Caulfield, Averill, and Noyes is here to answer your questions. Listen to their live call-in radio show on this channel every Tuesday evening from 5 to 6 p.m. or call them at 727-796-8282 or visit them at voiceoftheinjured.com. Offices Clearwater, non-attorney spokesperson.
Tampa Bay's Tan Talk. Entertaining and informative radio for the Sunshine State.
And we are back from that short commercial break. Hopefully you are still with us because we are live with FLA Law, live on the air. We have had a great and interesting show so far with tax attorney Alina Miles, who's been going over different hurricane casualty losses and how they can be deductible for individuals and also businesses. And so we've got a good bit more to get into so that it'll help you all, not only from past storms that we've dealt with Hurricane Helene and Milton, but maybe potentially for future losses that could occur. You want to be informed and know how to handle these things. Our lines are still open at 727-441-3000. Feel free to give us a call if you have a comment or a question about anything that's being discussed. And of course, feel free to leave a comment on any of our live streams if you would like to pose a question or just chime into the conversation as we go along. If you have inquiries like I have throughout this show, it's been very interesting for me. So with that being said, let's jump back into it because I know people get very overwhelmed after a storm and it's kind of hard to think about the paperwork, and sometimes they may even lose paperwork in the storm, especially with the massive amount of flooding that we had last year. Things just kind of washed away. And so when it comes to documentation, is there like a bare minimum that you recommend, getting done right away?
Yeah, it's not like I have a clear-cut answer for that.
Mhm.
However, the minimum you could do is take pictures
Mhm.
of let's say a house, if we're picking on a house.
Right.
Now, if you can do an appraisal, that would be best.
Ideal,
but
yeah.
are there listeners out there who are gonna jump and go and get appraisals tomorrow?
It's hard to do when you're in the, like you said, in the hustle and bustle, and it's like you're watching the news. Should I evacuate? I don't know.
Yeah, good if you can do do an appraisal, but like I'm not suggesting that that could be a little extreme. But
Yeah.
take pictures and document, what you have. That probably would be something you can do at a minimum.
Yeah. Are you aware? And of course, if the answer is no, I will accept that. But are you aware of any helpful apps or things that people can use, websites that can help them kind of gather that kind of information?
Yeah, actually, like IRS has a lot of good information. And as a matter of fact, with this past storms, they did keep taxpayers in the loop. If you subscribe to their newsletter, for example, that they extended the due date to May 1st of 2025.
Right.
So obviously that passed now. But like I mentioned, if you do have penalties related to past May 1st, there could be options there, so it's case by case. But nevertheless, like following the hurricane related relief with the IRS, that could be subscribing to the newsletter. That could be a good idea.
Okay, I think so, because a lot of people do want to kind of keep up to date with these sorts of things, and they just don't really know where to look.
Yeah,
So,
and I would recommend that people take proactive approach, because sometimes tax professionals that they go to, all they want to do is do the tax return. Okay, so thinking ahead and asking those questions. Maybe they're just not aware of that specific hurricane-related tax relief. Maybe they're just not aware that you have that hurricane-related laws. Okay, so talking about it, asking questions, that's a good way to keep up with that as well.
Yeah. Now, I may be jumping a little bit around here, but when we talked about the differences between businesses and individuals, I don't think we really got into the things that businesses can claim as casualty losses versus individuals. Because I was reading through an article that you wrote, and I realized that there was a lot of personal items that I would think would be, but apparently they're not for, I guess, personal or individual claims.
Yeah, so basically, in general terms, without getting into specific details, the idea is the same. If the business suffered losses due to, in our example, hurricane, and is directly related to that casualty, to that hurricane, then whatever that is. It's a potential deduction. Now, obviously, you have to substantiate that deduction. You have to have the number, or if you had to do a repair or whatnot, you have to have an invoice and all that. And you can talk through those things with your tax professional. But it's good to kind of have like a zipped folder, if you will, where you keep track, or Excel spreadsheet, even better, where you keep track of those losses that you can potentially claim as a deduction, and basically whatever the invoice is, you had to repair something, so like, okay, so substantiated that with that invoice.
Yeah, and I have a list here of, you can even claim things like inventory, loss of your inventory, business interruption, not being able to have that ongoing business, even temporary relocation, right? That seems to be, now we've seen businesses that have had to, go to different areas. They moved off of the beach and relocated to different parts. So those things seem to be deductible then.
Yeah, generally speaking, yeah. So you would have to look at, okay, so if you had to move offices, right, because your office is flooded, then okay, so you're paying new rent or whatever you have to pay extra. Yes, so you should definitely bring that to the bucket of hurricane related, if we're talking hurricane related business losses that you can potentially deduct on your tax return, for sure.
Yeah. So then what about, and I think I saw it in your article as well, when you've made these claims through your insurance. So you were fortunate enough to have, some sort of casualty loss coverage, and you make these claims: business interruption, loss of, property, your loss of inventory. You've made all these claims, and your insurance company has now sent you a check. And you've cashed that check, and now you want to do your taxes. How does that check come into play?
Yeah, so that was one of the first questions we briefly touched on, where you have to look at before you even, like, there are a bunch of steps, but one of the steps is to look at your insurance reimbursement.
Yeah.
Because it's what you can deduct is net of insurance reimbursement, which means you cannot double dip. That's basically what the idea is. But like what the point is that if your insurance reimbursement is above your basis, so that's where you kind of have to look at, okay, generally it's taxable, but then did you reinvest it? Are there any other tax provisions that you can take advantage of? So it meets that exception that it's not taxable. That's my point.
Okay. Now, is there ever a time where that check that you receive, you now have to pay taxes on that? So you're not able to deduct, but now it's considered income, if you will.
Yeah, so that would be that example where, let's say, for whatever reason, the insurance reimbursement proceeds exceed your basis. So you would have to make that determination.
When it's considered a gain at that point.
It's considered a gain. And then you didn't reinvest it. You didn't take advantage of any tax-related provisions, and it doesn't make any exception. There is no gain deferral. Yes,
that's when they need to be coming to you to make sure they're not doing it that way.
but yeah, like there are you have to look at the general rule, just like with everything in law. You have to look at the general rule, but you have to also look at exemptions, exceptions, and so on to see if it's taxable. So general rule it is if it exceeds the basis.
I gotcha. And so I want to make sure I understood correctly before we jump into some other topics, but am I understanding correctly that personal belongings such as boats, aircrafts, mobile homes, trailers, motorhome, automobiles, and different things like that are excluded for personal or individuals?
Yeah, so basically, I think you're jumping onto safe harbor.
Okay, tell me about that.
Yeah, so like safe harbor is a little simplified method, if you will, that IRS allows for taxpayers to take advantage of.
Okay.
So it's less, it's more simplified. That's the best way I can explain it. So yes, as a part of that.
So what is the safe harbor method, I guess, if it's not the complicated version? What are the IRS safe harbor methods?
So basically, that's a more like an easier way to determine how much in losses you can deduct.
Okay.
So it's an easier.
Is it a certain form, or
it's just basically like an election, if you will. And I'm referencing Rev Proc 2018-08. Not to be too complicated, but basically, if you follow that safe harbor method, and typically the IRS is not going to. Once again, this is just talking, but IRS is hopefully not going to dispute your calculation if you use safe harbor.
So you're
method.
Maybe, again, not for sure, but maybe least likely to be audited if you use these methods.
Yeah, it's not that least likely. It's more like taxpayer has a little bit more leverage on if they follow that simplified safe harbor and make that election, if you will. Hopefully IRS is not going to have a problem with it.
I see.
That's
nothing should raise red flags. However, then it sounds like you may be more limited if you use that method.
Right. So just like you mentioned in my article, personal belongings such as boats and aircrafts are excluded. So for example, let's just like make up an example, right? So if you decide to go safe harbor, it's simplified. It's an easier to follow method. But if you have a yacht, right? A big yacht.
Of course, don't we all?
Okay, so it's probably like more on the luxurious side, which is what I like.
Yeah, of course.
But they're not gonna let you use that
the safe
for
harbor.
Those
Yeah, I see.
We're just speaking. We're limiting this little discussion to safe harbor.
Yes,
only, right?
yes. Okay, so then getting into the grand scheme of things, obviously we know that that's a bit limited. I want to go then broaden it back out because I'm thinking again of what we recently went through in 2024. So many people lost their vehicles. The cars were flooded, and people had to replace those cars, likely getting newer vehicles. And So how does that come into play? I'm assuming a lot of people went through their car insurance and they made claims for, the total loss of the vehicle, and then they were able to go and buy a new one. But how does that come into play with a tax claim?
Yeah, so you would just have to follow the same steps as what we talked about before, which is like step one, okay, is it federally declared disaster?
Right.
In our example, it is. Step two, is it personal or is it business? Okay, so it's personal. And then you go through, okay, did you receive reimbursement from insurance? Whatever you can claim potentially is net of insurance reimbursement proceeds, okay? Then you look, okay, did you get those proceeds? Did the proceeds exceed the basis? That's the next question. Then you go through mathematical calculation to see how much on your tax return you can potentially deduct. So it's a bunch of steps, just like with anything else, you have to go through to figure that out.
Yeah. Okay. That makes perfect sense. So then we touched on it a little bit already with the whole safe harbor thing, but are there any other pitfalls that you can think of that might come about if you go through the simpler safe harbor method that people may not be aware of?
The way that I typically approach all of my cases is I like to give people options. I like when people know my option one is such and such, my option two is such and so on and so forth. And then they get to pick and decide which option works better for them. And each option comes with pros and cons. So it's just typically how it works. So it's one of the options, and it's just something to think about when you talk to your tax professional.
Absolutely. So I know we've touched on it a little bit, but we just want to make sure we dispel any myths or rumors that might be out there. Maybe you weren't listening in the beginning and now you tuned in. Is it true or not? Can you deduct all your losses after a hurricane, even if they've been partially covered by insurance? Or maybe just some of them.
So yeah, you just, once again, this is just, I'm going to take you back to tax attorneys, mathematical calculation, right? Step one, is it related to federally declared disaster?
You have to go through the steps.
You have to go through the steps to get you to your answer. There is no quick clean cut answer. Just
it's the lawyer answer. It depends, right?
It depends.
It depends. There you go. They hear that often on this show.
We go to law school to get it drilled in our head.
It depends. And so everybody's situation is unique. And so let's get a little bit into some of the math of it, because you mentioned that before with business losses or even with individuals. Is there like a floor that you have to really prove? Or I know with businesses, I think in your article there was about like a $500 thing, and then there were AGI limits. So what is that about?
Yeah, so those limits apply to personal, not business.
Personal, okay.
And that's why business is more, like I said, it's more flexible, because those AGI limitations don't apply to the business side of things. But with the personal, correct, there are various limitations. Now, you also have to look at the law, to my earlier point, because TCJA brings stricter limitations. There is $100 per casualty rule, and then there is 10% AGI limitation.
What is that $100 per casualty rule?
So if you had multiple, if you had multiple casualties, your casualty has to be above $100.
Okay.
So that's so like petty stuff.
That seems very, very easy to
to overcome. And then 10% AGI limitation. So once again, that is all being calculated on Form 4684. It's a special casualty form that is attached to the tax return that calculates all that for you. But that's TCJA. Now, with the Biden's law, the one that would cover 2024 hurricanes, Milton and Helen, that was a little bit flex. That was a little bit made a little bit taxpayer favorable. So, for example, 100%, I believe, jumped to 500.
Oh, okay.
So there is a little, and I believe they got rid of AGI limitation. So
during that time period of the law. Okay.
Yeah, so they allowed for that. And now Big and Beautiful, I believe Big and Beautiful stays with TCJA, but we can double check on that.
Okay. All right. And which is not quite in effect yet then. So when it comes to Helene and Milton, which would be under the Biden law, What are the deadlines? Is it too late now to deal with those losses? And if not, then when is the deadlines that you people are potentially looking at?
So basically, the way that it works, remember we talked about amended tax
Mhm,
returns, right?
mhm.
So, first of all, the first point to make there, if you were to go that route, typically you have 3 years to amend your tax
Okay.
return and claim your refund. Okay, so
Good to know.
typically you have 3 years. Now, IRS has basically discretionary authority to accept or deny your amended tax return. So when you amend your tax return, it's never absolute guarantee that they're going to accept it.
Mm-hmm.
Okay. Now, in terms of 2024 tax tax return is due April 15th unless you extended it, and the extended due date falls on October 15th.
Okay.
So if you properly extended your tax return, you have that time. Now, to my
The
earlier
key is you said if you properly extended it. So if you did not request an extension, are you kind of SOL at this point?
So no, you just if you no, basically okay, and that let me pause right here because this is an important one.
Mm-hmm.
If there are listeners out there, there are taxpayers that never filed your tax return timely because they are just afraid that they owe a lot of tax.
Mm-hmm.
The penalty if you file your tax return but not able to pay your tax is much smaller on a big scale of things.
Okay.
Versus if you just say, okay, I'm just not going to file my tax return, I'm going to forget about it, and because I owe a lot of tax.
Yeah.
Your penalty is way more.
Mm.
So no, if you didn't file your tax return, file your tax return.
Yeah. Yeah.
Even if you owe tax and you're afraid to show your tax, no, file your tax and file your tax return timely.
Mm-hmm.
So okay, so to jump back to your question, if let's say you never filed your tax return on April 15th, you never extended it, you will owe some penalty and interest. If you owe tax, they'll add on interest and all that. But no, go ahead and file your tax return.
Okay. And then at that point, you can still potentially claim the hurricane losses from 2024.
Whatever your 2024 tax situation is, you file your tax return.
Okay.
Yeah.
Good to know. Now you did mention,
and I apologize.
No,
Yeah,
go
an
ahead.
important point. So with the Helen and Milton, because you specifically asked about those hurricanes, right?
Mm-hmm.
So the IRS provided relief for, let's say, Florida taxpayers who were impacted by Helen and Milton, and that due date was, I believe, May 1st, 2025. So we had a little bit more time, if you will, to to play with. Now, if you're sitting here and you missed that May 1st, 2025 due date, and you were impacted by those hurricanes, talk to a tax professional because there could be options there.
Okay.
So just don't just think, okay, it's cut off and there is no option there. Just, talk to a tax professional. Mm-hmm.
Okay. Now you did mention earlier about mold and how that can be tricky because you have to actually prove that that loss came from, the federally declared disaster. What about things like landscaping or tree removal, or if tree, and sadly I know how this can happen, that a tree falls on your home and you have to have pay quite a lot of money to get the trees removed and things like that. Are those things deductible losses?
Yeah, so hopefully you don't have that situation. But if you do, yes, basically you just have to go through the steps. And, just I'm going to take you back to step one. But the main question is it directly related to the hurricane? Just like with mold and everything else, if you can prove that, if you can establish that, then you just have to go through the calculation on the step.
Right. And you may not get as much pushback as you might get from an insurance adjuster or someone who's coming out and saying, oh, well, that didn't come from this. As the IRS seems to accept these things, or do you think they highly audit these kinds of losses?
Yeah, actually, there is no crystal ball to tell us who they audit and why they audit and all that. We don't have that. You don't know. But once again, If you are selected for an audit, I do want to tell once again to the listeners that it doesn't mean you're in some kind of trouble.
Sure.
You just have to
Absolutely.
go through that, and if you need a professional that takes you through that, you resource to that professional, but it's not automatically that you're in trouble.
Right. So, are there any key takeaways before we start to wrap up the show that you think people should know, especially now that we're kind of in the midst of our 2025 hurricane season? From your perspective as a tax attorney, any key takeaways for our listeners?
Yeah, definitely. So explore your options.
Mhm.
Okay, it doesn't hurt to, if you did have hurricane related losses, it doesn't hurt to ask that question proactively. Maybe your tax professional didn't even realize that you have those losses. Maybe you didn't even realize that you can have additional options, and you heard something new today and you didn't realize that that was on the table.
Mm-hmm.
So connect with the tax professional to go through your options. Okay, so that's first tip. And second tip, okay, you just need to document basically if that's were to happen, if you were to be impacted by future hurricane and you sustain that directly related loss from that future hurricane, just make sure you have the pictures, make sure you have appraisals after the hurricane, and whatever else you have, repairs, receipts, be organized with it. We have so many from technology standpoint, Excel spreadsheets, whatever. That's there is even better technology, I'm sure. But be organized with that. Keep a zipped folder with all those receipts and other evidentiary support to substantiate your deduction on your tax return.
Yeah. So in situations like this, if you have someone who's listening right now and they think, oh my gosh, I may have some deductions that I really need to try to address, before these deadlines come up. But they do their taxes on their own, or they use software, or they go to H&R Block, or AmScott, or some smaller entity. Is there ever a time where you think they should say, call me, call a tax attorney, as opposed to trying to handle these things on their own, or with maybe not as sophisticated tax preparer?
Actually, it's a very good point, because I do have a blog on my website where I explain that people who use TurboTax and then they go, basically they get in trouble with tax, and then they say, well, I paid for TurboTax. TurboTax needs to do my tax job.
Yeah.
No, that's not how it works. Okay. You have ultimate responsibility for your tax return. You assign in your own tax return, and you attest to the accuracy of your tax return. So if you didn't do proper research related to a tax matter, it's on you. It's not on the TurboTax.
Yeah.
So, and there are quite a few cases where taxpayers lost that point. So it's on you, whether you do it yourself, whether you hire somebody, whether you have a friend do it for you. It's all with you.
Okay. And so is there ever a time where you feel that it's best to have a tax attorney like yourself?
Of course,
Yeah.
always.
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 That's the answer I was looking for now.
Always. If you want to double check something, you can come to me. If you're not sure about something, you can come to me. If you want to explore options, you can come to me.
Absolutely.
Yeah, definitely. Yes.
Okay. Now, when it comes to the matters that you mentioned earlier, if they get an IRS audit and things like that, or that may not necessarily be pertaining to what we talked about tonight, what is the best way for people to get in contact with you, reach you, and say, I like what you said, and I think I have some options? How are they going to get in touch with you?
Yes, the best way is to call me, and my phone number is
Go ahead.
727-977-8270. And as we talked through today, I'm a local tax attorney.
Absolutely.
So I'm in Safety Harbor. So it's a local number. I have a physical office in Safety Harbor. Some people like to see me in person.
Yeah. People still enjoy meeting their lawyers and face to face. Yeah.
Yeah. So definitely call me. And I have a website, taxattorneylegal.com, 3 words in one, taxattorneylegal.com. You can can book your appointment directly through the website, but ultimately calling me is probably the better way.
Awesome. Well, Alina, thank you so much.
Thanks.
It has been a pleasure having you on our show tonight with FLA Law live on the radio. Folks, that's our show. I hope you learned something beneficial. But if not, come back next Tuesday. We'll try again with our live legal call-in talk show, FLA Law live on the radio. See you next week, folks.